What's going on, guys? It's Matt Fractal back with another video. As you know, we get straight into the videos. I do have one announcement. If you guys take a closer look onto the channel, I switched the name from Matt Fractal to TPFX, which is Time Precision FX. So I just want to take the spotlight off me specifically, and number one, give all glory to God, and number two, just to make this more of a community-based channel. So with that being said, let's get into the video. We're on the Euro USD on a daily chart. If you go back to my previous video, my last video that I posted, I went over daily highs and daily lows being the most easiest PD arrays in the market to base your trades off of on a daily chart. And since the market is fractal, swing highs and swing lows on any specific chart, depending on how lower or higher the time frame you go, which is better for you. This is on every time frame, so let's get into it. We're on the Euro USD, by the way. Today is Tuesday. It's after 5 p.m., so we're starting the Wednesday candle, but we're going to be specifically focused on the Tuesday candle. So Tuesday we opened, traded up. We traded above yesterday's high, but if you look back to the left into the price action, we have a swing high right here. So we have a candle. The next candle punched higher, but the next candle opened lower. So this is a swing high pattern. I was expecting it to punch above here because these two swing highs would have been relatively equal, which I talk about all the time, but the market does what the market does, and it wanted to react off of the first swing high. So this is our daily PD array as the old swing high on July 28th, 2025 for your back testing. So now I have my level. Let's go down to a 4-hour chart. Okay, now we are in a 4-hour chart. This is going to be our level, the daily level. We go down, we can get closer into the price action, right? So once we hit the level, if price wanted to continue going higher, it would have done that. But it didn't. We got to break down with this candle right here. This specific candle broke down below the last up close candle, which if you did your studying with SMC or fractal SMC, you know that when we break down below the last up close candle, if we're going to be bearish, this is going to be a potential bearish order block. So now let me draw out this bearish order block here, the opening and the low, right? So we had a breakdown with this candle. This becomes a potential bearish order block. We mark it out. But prior to this being an order block, we want to look into the 4-hour range right here and look for the nearest swing lows because we're looking to pair the liquidity. We took the buy stops above that daily high. Now we want to pair the liquidity below the 4-hour sell stops. So the nearest swing low that I see is down here, which we're going to see it on a lower time frame. But as you see, price traded down, and this is where the liquidity is for the sell side, and we're aiming here. So now we have a range, fractal range building. This up close candle becomes a bearish order block once it gets broken. And now we have to go on a lower time frame to see if this gives us a pattern. So let's go down to a 15-minute chart. All right, boom. So beautiful. This is how we're going to read the market. Price trades up into a premium array, which is the old high, right? Go back into the video if you guys are lost. The old high is that premium array. Then we go down to a 4-hour chart and we identify where can we pair the orders. If we took the buy stops, we want to pair them with sell stops. Just the opposite, right? Very simple. Next, on that 4-hour chart as well, we broke down with a bearish candle and we broke down below the last up close candle. And I don't want to sound like a broken record, but when we break up close candles in a bearish setting in the market, that up close candle turns into a bearish order block. And it can be used as a precision level for a short on a lower time frame, which you can see right now. Price made a high, it broke structure here, traded back up, we had a OTE, right? But this is the first one. And say you probably would have missed this one because this is not where the order block lined up with. We're gonna back test that one, but this would have been the first one. So let me mark that out, right? Simple, we had a high, a break of structure, and a retracement back into the 62 to the 79%. That could have been your first short, but even so, this was at 5:30 a.m. So this was in the London lunch from 5 to 7 a.m. So you wouldn't even have got into this trade. So it's no worries for not getting in at the top, right? The next setup would have been here from this high, breaking below this low, break of structure. We already know that we're aiming for these sell stops down here. So this is not going to be a run on stops. This isn't going to be a run on stops. These are breaks in structure. This is the price giving us clear confirmation that we're going lower. Break the structure, and then in the New York session, the New York session and the London close, because this was the 10 a.m. candle, so the London close, we trade up into a fair value gap, but this fair value gap is inside of the 4-hour bearish order block. So write that for your notes. Higher time frame PD arrays will match up either with order blocks, fair value gaps, rejection blocks, any PD array on a lower time frame as well, because price is fractal. So now let me get the pattern. We have a high down to this low, and again fractal. It's the same pattern, high to low into the 62 to the 79%, paired with a 15-minute fair value gap inside of a higher time frame 4-hour bearish order block. So there's 3 confluences in one trade. This is a beautiful trade for the Tuesday setup. The London close, trading in with this candle here. You'd be waiting for price to trade up. You'd be going short here. Where would your stop loss be? Well, for TPFX, we always put our stop loss above that high that started off the range for the optimal trade entry. So now we want to see if price can trade aggressively below this low, because we want to take the sell stops out of the market, not just, play around it and build up more liquidity. Eventually, this low will be taken and sell stops will be taken out the market. So hopefully you guys are getting something from these quick videos, these quick lessons. The market is heating up because it's September now. So, and it's the school year started. So be vigilant and be diligent with your trading and with your study. TPFX. Have a good night.